Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've had a lot of economic data come out today. Not very good. Core durable goods orders came in at negative 1.2%, was expected basically unchanged. Jobless claims came in a little bit lower than expected. Durable goods orders came in at negative 5.1%, and it was expected to be relatively unchanged. Pending home sales, real surprise here, came in at negative 0.1%, was expected to be a positive 1%. Now, I talked about this the other day with the FOMC raising rates. The Federal Open Market Committee raised rates. That should have gotten a lot of people off the porch, off the rocker, and out there looking for houses. That not necessarily the case for the pending home sales. So we saw the new home sales was a lot better than expected, and I would have expected pending home sales to come out a little bit better than expected. Natural gas storages also was a drawdown, basically right at what was expected. All right, moving on to the NASDAQ. As you can see here on the chart of the mini NASDAQ /NQ, up about 20 points. Really still running lockstep with crude oil. Crude oil's up also, traded up almost to 35 this morning, and then slowly started coming off, really right lockstep with what was going on with the equities. As you can see here on the E-mini NASDAQ, we're also just treading water above by about 4 points. So the overall market is trying to discern which way it wants to go. Bad economic data and crude oil moving higher, kind of putting everybody into a bit of a tailspin. As you can see here, right on the number on the economic data, we just kind of sold off and were able to rebound a little bit afterwards. That's when oil started kind of rallying, came up, tested this point of control, and are starting to come back off. It's just the bears are in control right now of the overall markets. On to some trades that I've done. Did 2 earnings trades yesterday. BABA got out of it right on the morning. You know, as I like to talk about with these earnings trades, I like to get out early in the morning, and surprisingly enough, they beat earnings and are now really just free falling after the open. But good enough for me. I got out early. But I had on the January, with 1 day to go, the weeklies, the January 75, 61 and a half strangle in there. I originally sold it for 77 cents, bought it back this morning for 16 cents. The other one that I did was with everybody else, Facebook, and it actually moved outside of the market maker move by almost double. I think the market maker move was about $5, and like I talked about in these earnings trades, I like to try and at least double that on what I'm looking at in anticipation of these earnings trades. If the market maker moves $5, I like to try and at least move it around $10. So when I was looking at this yesterday, Facebook has just been crushing it. They kill earnings every time, it seems like. So I just did the puts in this and did the January 86 puts and sold them for 38 cents yesterday, bought them back for 2 cents this morning on the open. So that was a nice little trade. Thankfully, I didn't take the upper end of that one. I didn't want to fade Facebook. They've just been killing it on earnings. So that's about, the one trade that I put on today, added a little bit to SPY, trying to get some short deltas going again. And in the March, I bought the 175, 171 put spread, and then I financed that because I'm buying a put spread. I financed that by selling some calls, and I sold the 95 calls, and I collected a total premium of $1.33 on that. Sorry, this didn't go through. So basically sold the 197 calls up here. That should start acting as resistance. I'm thinking right in there, and then bought the 175, 171 put spread. So obviously I'm looking for it to come off a bit or stay sideways in this range, and I'll be just as happy. So it's just a way to kind of collect a little bit of premium on a negative delta play there. So as you guys know, I like to collect a premium anytime I can, and when you're buying a put spread, it's a debit. So I did this to collect the credit. All right, Friday, we got a webinar coming out, and it's going to be on synthetic short stock. So I'm going to show you how to take options and create a short position on a stock rather than trying to go out there and find or borrow some stock is what you have to do and get short that overall underlying. This is going to be a lot less margin to create this position, and you are going to get the same result. So for every dollar it moves down, we're going to be able to collect $1 for our short position. So it's going to act exactly like a short stock position. Check that out Friday. You can go to protraderstrategies.com and sign up for that. That's all I got for you today, other than if you can't take that, take it easy.